So today we're going to take a look at some stocks this week to keep an eye on. So I hope you enjoyed the video. You guys seem to be enjoying this series that we do at the moment where we just talk about some stocks that are going to be making some moves this week. So let's get started. And if you're on the Patreon, make sure you go check out the earnings review from the stocks that reported earnings last week. If you do want to join and see that video and exclusive content on the Patreon, link is in the description. As well as that, if you do want a free share, join Trading 212 with the link in the description. You can get a free share worth up to £100. That's the investing platform that I personally use. And congratulations to whoever it was that got the £50 share in Google and whoever got the £50 share in AIG as well over the weekend. So well done to you guys. But first thing to say, on Monday, don't be that one person that goes, why is my account not moving? It is a bank holiday in the US, so the markets will not be open because it's President's Day. So we will have to wait. It's a 3-day weekend in the US, so we will have to wait on Tuesday for the US markets to open. Obviously, the UK will be open though on the Monday. So just be careful because there's always someone that does make that mistake. So you can enjoy the gains on DraftKings for a couple more days here, so that's okay. And get to look at that 15% jump out on Friday, 1 day longer than normal. So hey, that's a positive. But let's get into some companies that report earnings this week and my thoughts on them, and I'll just go through them for a couple of minutes. So starting on the Monday, obviously there's not major amounts of companies reporting, with it being a closed day on the US market. On the Tuesday, Walmart will be the big one that everyone stares at. We start to get into the time where we have a lot of retail that start reporting earnings. So Walmart, we have Home Depot. I'm surprised Target's not on here. Maybe Target's next week. But yeah, obviously Walmart will be reporting. I think last time the earnings had a little bit of a wobble as inventory was a little bit high, but the numbers were okay. So be interesting to see what comes in and what they're currently seeing going forward in the retail space. We have Mawson's Cause, which I actually took a bit of a look into not so long ago. Decided it was a little bit of a rich valuation. On the close though, the only really standout one, is Public Storage, Toll Brothers, so you get a bit of housing there, Caesars. So obviously that will help with the numbers from like what DraftKings is in, but we've had DraftKings report Friday, so not too bothered about that one really. The only other one is Coinbase. This was the hype. Do you remember when this IPO'd in 2021? I remember everyone's cat, dog and YouTuber out there was talking about buying the IPO, and that IPO, obviously, as you can see here, was like a $342 and it's now down at $65. You don't see many YouTubers. I remember it was like all the biggest finance YouTubers were talking about this stock and buying this stock. You don't see them talking about that one anymore. One of the massive stocks that's been hurt massively at the moment. But yeah, I'm not really, as you guys know, I'm not really a fan of Coinbase. I'm not a big investor into Bitcoin or cryptocurrencies, so not really one that's interested me. Then we do start to move on to some of the Chinese stocks this week. So we have the likes of Baidu that were reporting. Fiverr's reporting, which is a growth stock that I'm massively keeping an eye on. I do really like the Upwork Fiverr space. The only problem that I've had with I think I prefer Fiverr over Upwork, and I prefer to use Fiverr as a service more than Upwork. The only issue that I've had with both of these is that I really like the platforms. I like the growth in the freelance industry and what Fiverr can do. The only issue I've ever had with these is the valuation. That's the only issue. So yeah, it's still not too far off its 52-week close. So maybe keep an eye on this one, and if it does have a little bit of a drop, maybe I'll take another look at it. But yeah, I just even all that time it was just dropping. I was like, I'll have another think about it when it drops another 10%, and then it will drop another 10%. I was like, it's still quite richly valued. I'll leave it for another 10%. So yeah, I think it does need to come down a little bit more before I buy, but it's a stock that I'm really, really interested in. We have Wix, Overstock, Garmin. Garmin we actually covered on the Patreon. We do a stock request series where basically the members on the Discord get to vote for 3 stocks they'd like me to have a little bit of a look into, and I kind of give I would say 5 minutes, but it all ends up being a lot longer than that. About 10 minutes look on the company and my thoughts on it, and Garmin was one of the stocks that got voted for I would say maybe 2-3 months ago, and it was a company that was a standout company. But same again, it would be great to see this one if it can drop a little bit into that $70 range. That's where I've got it pinpointed as a bit of a buy if it does get there. So one on my watch list if it does have a bit of a drop. We'll see what happens there when the earnings come out. Then we have the likes of Nvidia. Obviously, I think last time they reported the stock had a bit of a nosedive, so we'll see what they're saying about demand there at the moment. Obviously AMD had a pop when they reported earnings, so we'll see if Nvidia does the same thing. Lucid, Unity is a stock that I've never it's for some reason Unity has had a massive following. I've never really got over the line with Unity just because they burn through so much money. Etsy is a stock that I should have got up here, actually, the stock chart, and I haven't, but this is a company that I should have bought. This is one of the ones that I look back when it was $80 a few months ago. You know, this is always the issue when we hit these bear markets. It's the same as when we were in that CV time in 2020. You know, in March, you know, there was just so many stocks on sale during the time frame that you're like, I want to buy this, I want to buy this, I want to buy this, and you just sometimes miss them opportunities. And Etsy is probably going to be one of those where I look back and like Etsy was like $80. Let me get the stock chart up actually. So yeah, you can see here the actual 52-week low was actually $67. I didn't even realize it was $67. So yeah, I mean, I should have really bought in this time frame, but I just didn't. I think one of the things that I probably did put me off at the time thinking about it is I believe there's a little bit of debt on that balance sheet. That was a bit like, oh, but I mean, it was like 21 forward earnings or 18 forward earnings or something like that, which is just absolutely insane. So congratulations to anyone that bought in that dip, because it's one that I should have really bought, to be honest with you. We have T-Doc that are reporting. I have a stake in T-Doc. I've not bought for a very long time. As most of you guys probably know on the Patreon more than anything. I've always said I never have been chasing T-Doc because financially they've been doing okay. They've not been doing amazing. But there's a stock in this space that I've been buying heavy, which is HIMS, which, by the way, HIMS are not reporting this week. They're actually going to be reporting next week, so we still have to wait a week for these guys, but I'm really looking forward to what HIMS have to say. But yeah, I've not really been buying this one because I've always said, like, what's the point of me buying T-Doc at the moment that are only doing like 4 or 5 out of 10 when there's been a stock like HIMS that through 2020 has been buying 10 out of 10 in the same sort of space, really. I might as well buy HIMS stock, and that's clear that in the last kind of few months that's now being reflected on like the share price for HIMS, because it's just been absolutely insane. I mean, look at that. It's up 129% in the last year. So yeah, that was a really good decision that I made there to switch the buy-in. But I've got to see where I'm at with T-Doc now, and if I potentially look, is this a stock that I just look to get kind of break even out at? Is it a stock that I average down in? So I'll be looking at them earnings and see what they say there. Then we move on to the Thursday. Thursday is definitely the biggest day of companies that are going to be reporting earnings. We've got Alibaba that are going to be reporting. This will be really interesting to see because we've got obviously the Chinese restrictions on the CV kind of calming down. What do they see? What do they see going forward? So guidance will be very key on what they say going forward. And yeah, we'll see what happens. I've got to say, the funny thing with Alibaba when you look at it is that I remember, like, this was a stock that so many people that were saying, you know, oh, this is why you've got to value stocks, and, you know, bashing on a lot of other stocks and saying, oh, so we're going to buy Alibaba. And it's just a prime example. Like, I remember people saying, oh yeah, under $200 is the buy for Alibaba, and it just shows you, boom, and that one actually fell down 64% from there, and you know, that was a 52-week low of $58. Like, when stocks crash, you can't value stocks. When there's max fear out in the market and stocks are going like this, you can't value stocks. Stocks will go down to as low as they want to go until that fear is starting to, where there's too much fear priced in. And that's exactly a prime example of Alibaba. That it was a stock that a lot of value investors said, oh, this is why you got to value stocks, and then they valued it, and it went down over down 50% from where they said it was. And it's just a prime example of the bear market that we're in. But getting back to the point, yeah, I mean, I think that's going to be the key thing with Alibaba when they come out and say the numbers. And then we have Moderna, Domino's, Wayfair, Nikola, that I don't know how they're even still appearing on this list here. I wonder if they're still pushing down lorries down the hill. And then we have Yeti that's reporting earnings. Once again, this is a stock that actually came on the stock request. Very interesting company, so I'll probably keep an eye out for that one. Then we have Block that's reporting earnings, obviously one that I own, see how they do with their numbers. Key thing to be looking at them is the subscription revenue and seeing how that's doing. Kavana, Mercado Libre, obviously the ideal situation, I've said this quite a few times with Mercado Libre, the ideal situation with Mercado Libre is that unfortunately for me, I'm up on this position a fair bit now, probably a bit too much where I want to buy it. So ideally I see it bring out good earnings and then the stock goes down. That's the ideal situation, but these guys report earnings as well. We have Booking Holdings. We'll see if they can carry on the momentum from Airbnb earnings that they brought out the other day. We've got Warner Bros. Discovery, Wish, which I'm very sure that's on the way to bankruptcy, but still making this list. Intuit, we've got Farfetch, And then we have Beyond Meat. Obviously, Beyond Meat is unfortunately one of my worst investments that I currently have in my portfolio. It's not been one of the better performers. So overall, Beyond Meat is actually the only stock in my portfolio that I own that I actually view negatively. Every stock that I own, I'm quite positive on it. Like, I think they'll do very well. But unfortunately, Beyond Meat is the only stock that I own that I'm a little bit worried for. As I said previously, this company has very much moved away from where I invested into the business a year ago, 2 years ago. If you look here from summertime 2021, you know, in this quarter, you had a company that was growing 32% year-over-year growth. You had the food services growing 218% year-over-year growth. You had a company that was making good amounts of gross profit, you know, 47 million, which was great. So you had good gross margins on the product. Net losses were at 19 million, and adjusted EBITDA was a loss of 2.2 million. So they were kind of getting, you know, close to break even. You know, you'd start thinking, well, if they continue to, you know, increase the food service, they had the McDonald's partnership coming in, they had the Pepsi partnership coming in. If they carry on improving the revenue, you know, scale the products, then they end up making profit. And you think about all these exciting partnerships that are going to come in, and the gross profit and the revenue that they're currently on, you think, oh, it's looking really positive. But only with, and it shows you how quickly an investment can go sour. Only a year later, then when you're looking at Beyond Meat, and the revenue growth has gone, the food service has gone, partnerships have failed, gross margins have gone negative, revenue growth doesn't exist, the losses have increased, and it shows you how quickly an investment can go south. And they have, the good thing is I still think the product they actually sell is good. And I think the balance sheet is still not too bad, that they're okay at the moment, but it's definitely been a few quarters where they haven't executed, and they do really need to turn it around. So yeah, I'll see what happens with that one there. So that was just a minute or two on a couple of companies that will probably be making big moves this week. I think there's a few events that are happening, like we have the payroll increases. I think we have the Fed minutes that are coming out as well on like Wednesday. So those are a couple of events that might actually move the market. But yeah, those are a couple of companies to keep an eye on anyway, guys. I'm sure there'll be a couple that we potentially could speak about that do have big moves anyway. So if you could hit the like button if you're new around here, subscribe. And yeah, I'll catch you in a bit.